Chip stocks just put the dot-com rally to shame. Micron and the Dram Trio cracked trillion-dollar valuations. And meanwhile, crypto's biggest story today is a Google engineer allegedly insider trading search results on Polymarket. 3 camps, 1 winner, and the data isn't even close. Welcome to today's Capital Clash, where your money fights for its life every single day. I'm running the numbers so you don't have to. It is May 28th, 2026. Let's go. Here's the macro backdrop. AI CapEx is still the only story Wall Street wants to tell, and today it hit a new gear. Marvell guided higher on what they called exceptional AI demand. Micron and the rest of the DRAM space, all 3 majors just crossed into trillion-dollar territory, a milestone that would have sounded insane 18 months ago. The surge in chip stocks this year is literally being compared to the dot-com era, and right now it's outpacing it. On the other side of the ledger, utilities are quietly being saddled with the bill for big tech's data center build-out, and that's leaking into household energy costs. Mortgage rates ticked a little lower into Wednesday. Top 12-month CD rates are sitting at 4.05%. The dollar's behaving, and crypto is dealing with a political war chest, tilting Republican ahead of the midterms, a new Texas bank entering as a Wall Street rival, and the Genius Act repricing Bitcoin's monetary premium. 3 very different stories, 1 scoreboard. Let's break it down. Round 1, crypto. And folks, it's an ugly tape today, but not because of price, because of the noise around it. The dominant headline on Reddit with 6on65 upvotes is Bubble Maps investigator Nicholas Vayman flagging 80 Polymarket bets with a 98% win rate that he called statistically impossible. And right on cue, CoinDesk runs the parallel story. A Google engineer charged by the feds with insider trading search results on Polymarket for roughly $1 million in profit. That is the headline crypto did not need. It hit Reddit. It hit MarketWatch. It became a cross-camp story. Then you've got Charles Hoskinson's $250 million clinic shutting down after buying up NFTs and robots. 230 upvotes, and not the kind of attention Cardano wanted. The third top post, someone just said, made it to .01. That's the retail mood in one sentence. Tiny wins, gallows humor. On the bullish side, there's actually substance buried in the news cycle. The Genius Act has repriced Bitcoin's monetary premium. According to CoinDesk's long and short column, a Texas bank completed a regulatory pivot to become a Wall Street crypto rival. The BS published a project saying tokenization could make cross-border payments faster and safer. And Elon Musk, if Tesla and SpaceX ever merge, could become a top 5 corporate Bitcoin holder. All real, all structurally bullish long-term, but none of it is moving the needle today. The scores tell the story. Crypto trends 15 out of 100. Google search interest is dead. Sentiment 34 out of 100. Sour, scandal-tainted. Buzz 22 out of 100. Added up, crypto scores 24.9 out of 100. Verdict on the round, crypto showed up to a knife fight with a fraud indictment in its pocket. Round 2, stocks. And this is where the energy is today. The top Reddit post on the entire investing side of the internet, 8,519 upvotes, is literally titled, How Micron Will Be Like Today. You're welcome. That is the Buzz number speaking. Stocks Buzz score a perfect 100 out of 100. Right behind it, 1,707 upvotes celebrating all 3 DRAM companies hitting trillion-dollar valuations. Think about that for a second. Memory chip makers, the most cyclical, most beaten-down corner of semis just a few years ago, are now in the trillion-dollar club. The Marvel story is the catalyst here. Stock climbed on what management called exceptional AI demand and a stronger growth outlook. MarketWatch's lead column is straight up calling the chip rally bigger than .com. It's not subtle, but, and this matters for the round, it isn't a clean sweep. Salesforce got punished. Shares sank on a soft revenue outlook with AI disruption concerns lingering. That is the bear case for software in one ticker. If AI eats the seat-based licensing model, what is Salesforce worth? Traders are asking. The China export shock piece on MarketWatch. Humanoid robots cheaper than a used car. That's the next macro overhang. Nobody is pricing yet, and the utilities paying for AI story is a slow burn negative for consumers, but a tailwind for power names. The retail mood is euphoric and salty in equal measure. It's not fair. I hate you all. I hate you all. 1,051 upvotes from someone who clearly missed the chip move. Realize my first gain. 1,001 out of 90 upvotes. Pure rookie energy. Volatility and asymmetric moves like today's chip tape are exactly the conditions funded equity traders on FTMO, E8 markets, and FinTokai live for. And after 80-plus prop firms collapsed in 2024 and 2025, those 3 are basically the survivors still cutting payouts, with FTMO just back in the U.S. via OANDA. The scores, stocks trends, 8 out of 100. Search interest is weak, nobody Googles stocks. When their portfolio is green, they just check it. Sentiment, 35 out of 100. Mixed because of Salesforce and the utility drag. Buzz, 100 out of 100. Total, 46.4 out of 100. Verdict, stocks didn't need to be loved today. They just needed to be loud. And they were deafening. Round 3, savings, the quiet camp. And today, it stayed quiet, maybe too quiet. The headline rate I can actually point to, best 12-month CD rates sitting at 4.05%, according to the College Investor. Mortgage rates ticked a little lower into Wednesday per NerdWallet, which is mild relief for would-be home buyers, but doesn't change the affordability math much. The SBA loan limit is doubling, but NerdWallet's own analysis says it won't matter for most small businesses, so call that a paper headline. On the policy front, Senator Warren has asked the GAO to probe whether education department cuts have crippled college oversight, which matters if you've got student loan exposure. And we got a story on the average cost of SAT prep, plus a quirky NerdWallet review of Disney's revamped rides. That is the personal finance news cycle today. Sleepy, the one Reddit post that broke through with 43 upvotes. Someone asking whether to buy their old house for very little. That is the entire personal finance conversation today in one thread. Compare that to crypto's 665 upvote scandal post or the 8,519 upvote chip celebration, and you see the buzz gap immediately. Saving sentiment actually scored the highest of the three camps. 47 out of 100. Savers are reasonably calm, reasonably content collecting that 4% yield without drama, but trends came in at 4 out of 100. Buzz at 5 out of 100. When nobody is searching and nobody is posting, you can't win a battle, even if the product itself is doing its job. Savings total 21.5 out of 100. Verdict, the 4.05% CD compounded perfectly today, and absolutely nobody cared. Head to head, stocks 46.4, crypto 24.9, savings 21.5. Was this close? No, this was a blowout. Stocks beat crypto by more than 21 points and beat savings by nearly 25. But look at the component breakdown, because this is where it gets interesting on trends. Actual Google search interest. All three camps lost. Crypto 15, stocks 8, savings 4. Nobody was searching for any of this today, which tells you the broader public was checked out. On sentiment, savings actually won at 47, with stocks at 35 and crypto at 34. So if you ranked purely on mood, savers were happiest. But buzz is where the battle was won and lost. Stocks 100, crypto 22, savings 5. The chip story dominated every conversation that mattered. 8,019 upvotes on a single Micron post versus 665 for crypto's top thread and 43 for savings. That is a 13-1 conversation gap between the winner and third place. Stocks won not because everyone loved them. Sentiment was mediocre, but because everyone was talking about them. In a market driven by attention, attention is the alpha. Crypto's middle finish is entirely a scandal problem. Two separate polymarket integrity stories on the same day. That suppresses sentiment and confuses the bullish structural news underneath it. Savings finished last for the simplest reason in finance: boring doesn't trend. The verdict, today's winner by a wide margin, is stocks at 46.4 out of 100. Why? Because Marvel's exceptional AI guide, the DRAM trio crossing trillion-dollar valuations, and a chip rally now outpacing the dot-com era generated a perfect 100 buzz score and dominated retail conversation by more than 10-1 against the competition. If you've got money in broad equities or semis right now today, the data says you are in the right room. Tomorrow's watch list. A few things to keep your eyes on. First, watch for any follow-through on the chip trade. When a sector prints this hard, day 2 is the tell. Does Micron hold? Does the DRAM trillion-dollar club expand or get faded? Second, Salesforce. That soft revenue guide could be the first crack in enterprise software. And if other SaaS names get hit in sympathy tomorrow, the AI disruption narrative gets real. Third, on the crypto side, expect more fallout from the Polymarket insider trading indictment. Regulators love piling on, and CoinDesk will be all over it. Watch Bitcoin's reaction to the Genius Act repricing narrative, and watch whether that Texas bank pivot pulls institutional flow. Fourth, on the savings front, keep an eye on CD rates. 4.05% is the current top, and if Treasury yields move tomorrow, that ceiling moves with them. Mortgage rates also worth checking after today's small dip. And finally, the China humanoid robot export story. That's a sleeper macro theme that could hit industrials and autos any day now. Come back tomorrow. The scoreboard resets at midnight. Before you go, everything on this show is for educational and informational purposes only. Nothing here is financial advice. Always do your own research before making any investment decision. Now, if you're holding chips tonight, drop a comment below and tell me your favorite name. If you got smoked, there's always tomorrow. Follow for the Daily Clash, and I'll see you next time. This is today's Capital Clash.